Okay, so let's get started very quickly. I think I'll go through what I have to go through very fast and very quickly so that when Fred comes, we don't get late. So welcome to today's session. I see some message on here. Okay. Welcome to today's session. Just a minute so that I record this stuff. Okay. My recording and I didn't put
Let
in
me
that.
tell you how things would go here. Make it to champs. Fathers, round of 16, like fathers, like after group. And
Let me mute everyone. Okay, so I'm going to go through three things, ladies and gentlemen. One, I'll go through the I am center. Secondly, I'll go to the harmonic scanner and how to take trades on the harmonic scanner. And three, I'll just touch on how you can take trades from Fias, Madam Fias herself. So the first thing we go to is I am center. Just go to login. I know you know this stuff by now. So you go to that part where you put your credentials. You say, remember me. Then you be brought to this page. Upon coming to this page, go to the three straight bars on the left. Click on it. There'll be a drop down with all the lists. Our center of concentration today is on I am center. So you go to I am center again, you'll be asked to put in your credentials. Again, you log in. Then you'll wait for it to put you in the system. So you're in. So in the basics, I know you learned how to use how to access the academy. So that is part that I'm not going to go to. Completions is just completion of the academy work. Pip Talk is interaction, generally interaction with the educators. So you subscribe or you just go to any educator on Pip Talk and you can follow them. It's like, social media of I Am Center. Okay, so for us now today, we are going to go live. So guys, on the day that you are signed up, you are told that there will be live channel, there will be live TV on this platform where you can follow an educator, you follow their strategy, learn their strategy and trade for yourself. And at the same time, while you're learning the strategy, you're told that you can collect some pips, you can trade with them live. So this is the place that we are going to. And let's say, before we go to the live educators, I want us to ask ourselves, you're this person who is very busy. You're this person who is having a full-time job, 9 or 8 to 4 or 8 to 5, whichever time frame that you have. You're very busy and you're asking yourself, now, what am I going to do to know which trader I am going to follow, which educator I'm going to follow inside this academy? So you'll go to Go Live section, then just scroll down to look at their timetable, okay? So what you're doing, we are looking at the timetable. We are all subscribed to Forex, apart from Jeremiah, who I know is in HFX. So you'll go to Forex part there, then a timetable will be brought to you, okay? So this timetable tells you these are the educators, these are the days that they are trading, and these are the specific times that you'll find them online, that you'll find them on our Go Live session. So you have this Mauricio, we have Mani of the Harmonics, we have Trade House, I think that's the name in the academy, you have Lex, Leon, all these educators, you can be able to follow them. Okay, so you just come into this section and you ask yourself, now, which educator resonates with my timing when I have some time that I can follow them and grow my trading skill? Ladies, remember, and gentlemen, remember that this is a platform to be taught how to trade, okay? This is a platform where you're taught how to trade. This is not a platform where you are forever collecting some pips. I mean, that's not the whole picture of this academy. Academy, you're going there to learn. You're going there to learn a strategy. You're going there to learn how to trade. Just like you go to school to learn some skills. This is a skill that you should learn. So come here. Okay. For example, let me break it down here. So we have money, for example. Okay, money comes on Tuesdays, Wednesdays, and Thursdays. At what time of the day? It comes at 10 a.m. Eastern Standard Time. On Tuesday, on Wednesday, the same time, on Thursday, the same time. This Eastern Standard Time, you can type it on your phone, okay? You must not know, by the way, how many hours you need to add. Just type 10 a.m. EST and search. It will give you the time of the day where you are, the real time. So at this 10 a.m. Eastern Standard Time in Kenyan time is basically 5 p.m. So you are going to add 7 hours on top of every Eastern Standard Time. So if you want to follow, let's say Kimberly Torres, she comes on Thursdays, okay? Thursdays at what time? At 10 p.m. Eastern Standard Time. That, ladies and gentlemen, I think will be on a Friday early in the morning, okay? Because this plus 7, that will be 2 a.m. 2 a.m. On Friday, our timer, because that's Thursday Gioni. So here will be Friday early in the morning. Yeah, and that's how you convert these timings. Just follow an educator until you feel you resonate with them, or you feel you can learn their strategy fast and start trading for yourself. Now, that is it about that. That is it about the timetable. I'll go back here. Again, you are told that this academy comes with it, the harmonic scanner. It's free for every customer who has subscribed in the academy. The harmonic scanner is free. But for every other add-on, like you want to learn a different strategy, remember harmonics is a strategy. It uses the harmonic scanner. So it scans the market and gives you some trade ideas. We have all these other add-ons that you can subscribe to at an extra fee and learn the strategy and be able to trade using that strategy. Okay, you can even subscribe to Elite, where you have access to all these tools, where you go learn the mindset, the vibrator, the gold cup, swipe coin, pivots, steady, DeLorean levels, and you come to a conclusion. Now, out of all these, I love trading with this particular one. Then you follow that with all your heart, okay? Like your life depends on it, as one of us likes to say. Okay, so that is it. So you just come here and click on it. Let me click on DeLorean, for example. So you'll be able to get another timetable now for DeLorean sessions. This is Cyron. It trades on Tuesdays, Wednesdays, and Thursdays. This is specifically for that strategy. Patty Kenny trades from Monday to Thursdays at 4 p.m. Eastern Standard Time, not Eastern Standard Time, East African time. And it teaches specifically this particular strategy. So that is it. If you are able to add on some tools to assist you in trading, then that is what you need to do, ladies and gentlemen. So I want to go back now to the live channels. Now, where do we get the live educators? At what time, or when I am free? Where do I find these particular educators who are live at a time that I have some time to, follow the academy and learn something? You'll come to these three dots on your right, then click on them. Upon clicking, they'll give you live channels. So you click on the live channel and you're able to see. So these are the educators that are live right now trading in the market. Okay. So you can see Sharif. Sharif, I think, is on because of the trading, the tradathon that is going on. Normally is not live at this time, I believe. Okay, maybe, oh yeah, but we need Web Analyzer subscription, which I don't have. So we can listen to any other, let's see, I think this gentleman. Just click on the person that you want to listen to or you want to follow, and you'll be able to see. So this one is now trading, maybe is teaching a given strategy. You'll be able to listen. And ladies and gentlemen, when you come here and see DVR, that means you are behind with some seconds. Okay? When you see DVR on your live educator platform, it means that you're behind with some seconds. So you come to this particular button here and click it. Then it will you'll now be live, like there's no second that you're behind. So that guy is trying to trade GJ. You'll be able to hear that. Okay, now, that is it about Go Live. That is it about the timetable on Go Live. And now we can go to the harmonic scanner, how to take trades from the harmonic scanner. Where is it found? So you go to login again, you come to Hot Links, sorry, you come to Hot Links, then click on it. Then you move to the harmonic scanner. This is not where the scanner is, ladies and gentlemen. It's not on the Oops video, it's on Connect Now. So upon connecting again, you'll be asked for your credentials. You will fill them up, then you log in. Last time it was, oh, today it has scans. It has beautiful scans. Wow, okay. So let's say you've gone to this, okay, like you've really interacted with the scanner and you've gone all the way to old scans and you want the latest scan. You'll come to this arrow, the top left arrow, which is like a trend line, and click on it, this red one. Then it will give you the freshest scan. Of course, it will be the one which was there on the screen. Now, this scan tells you your entry point is 70.505. Your take profit 1 is 70.29. Take profit 2 is this. Take profit 3 is 69.99. And stop loss is given there. I want you to know one thing, that any tool in the harmonic in this academy gives trade ideas. Note that word. Any tool gives you trade ideas. Even if you subscribe to what kind of strategy in this academy, you'll be given more than, I think actually there are tools that gives you more than 1,000 ideas per week, more than 1,000 ideas per week. So it's upon you to know which trades are good to go for and which trades are not good for you to trade on. So when you subscribe to other trades, you learn their strategy. The same way for harmonic scanner. It's not just coming here and, oh, this now has given me a sell, boom, you're in, you're selling. It may work for some time, underline the word may work, but it may not work for all times. May again not work for all times, okay? So for you to be on the right side, you need to understand how to use the harmonic scanner successfully, how to use the harmonic scanner with more higher probability of you winning trades. You don't want to just be jumping on trades, then you're losing and you're saying the scanner doesn't work. No, the scanner works. It has scanned the market, but have you checked all the other parameters that you need to check for you to enter this trade? Okay, now for basics, this is a sell. Why? This is because the market needs to go down. The market needs to go down for us to make money in the market. We anticipate a sell, we anticipate a short so that we make money. So what is it about TP1, TP2, TP3? All these TPs have been labeled based on the previous price action. They have not just been put there TP1, then some space TP2, some space TP3. They've been put based on previous price action. So you don't want to come here and say, this TP1, okay, how to measure pips, you come to this ruler here. You can come to this ruler, then come to where the market is, press on it, then drag down. Then you come and say, this TP1 is only 17 pips. No, that is too little. Let me go for 20. Okay, let me go for 20, for example. Okay, it may come there, but you know, this line has a meaning. TP1 has a meaning. It means that the market may respect that particular region. It may come down, hit that region, then proceed up. Then in the morning or whatever time you come back, you'll be regretting again. I should have put TP1. It only missed it with two pips. That is why, because this line has a meaning. Line 2 has a meaning. If it goes through line 1, there are chances that it will come to line 2 or to TP2 because of the previous price action. And TP3, of course, TP3 is less probable to be hit because it means that this market is very strong for it to break through region 1, break the region 2, and then come to region 3 where you have your TP. As you take the trades on this platform, just be aware of that. How do we scan for more trades or more scans? How do we get them? These are brokers. You come and click on a broker. They scan for 15 minutes, or the second part is 1 hour, 4 hours, or day charts. Let's come to for our charts, GJ. Good. These are sell. May want a buy for now. Let me try another broker. Another broker, EG. That's a sell. Want a buy. Okay, can try 15 minutes. This is a buy. Okay, so the same case applies to a buy. I don't like this scan. There's some scans that I don't trade myself. Like I don't even consider for analyzing, because okay, I've never seen this kind of pattern in the academy. So some scans I don't, just ignore them. See now? Sorry for that, guys. Yes. Yeah, this is a better scan. And this one is already, it has already hit all the TPs. Yeah? So here, the take profit was, okay, entry was 74.78, TP1, TP2, TP3. So you can see, based on your entry here, it didn't even go 1 pip to red. It went all the way blue, TP3 it. But you can see also the number of pips are not as many. It only add 13 pips for TP3. And that's a buy option. So the market is anticipated to go up for us to make money. If it goes down, that's against us, and it stops us off at that point. Okay. So these are brokers. You can have all their scans. Most of the scans are the same for different brokers. So you find that this broker, that scan, the same scan is on with another broker. And then up here, you'll have 15 minutes. So you can change this to 30 minutes the way you want. If you want to find a more perfect entry, you can change that to still be the same. This is the pair, and this is the type of scan. You have different scans in the market. Okay. And that is it, guys, about the harmonic scanner for today. So that we move to now fierce trades. Let me stop sharing this. Okay, I'm gonna share. So there are some precautions that we need to know just before tomorrow. Before tomorrow, 10 a.m. or 10:30 a.m. Joyce Mutungi, you have a question? Your hand is up.
Yes, I do. Kindly go through that menu again, how to get to that harmonic.
How to get there?
Yes, I'm trying and I'm kind of lost.
Let me do this. Let me show you what I'll do. I'll just log out, then log in again. Sawa, mikono ni mingi. Sawa, tuuliza tu maswali. Just a minute so that we go there again. Log. Are you here? On this one, on this now platform, you come here to the 3 arrows, then go to the odd links. Unaenda kwa odd links, links nze. Una click hapo kwa hizo links nze to come to I Am Live Academy Harmonic Scanner. Click on the Harmonic Scanner. Usiklik hii kitu hapa imeandikwa Harmonic Scanner. Usiklik, usikuwe confused at video I work. The video is not working, we don't need it. So we need connect now. Go to connect now. So that is where you find your harmonic scanner. And again, put in your credentials and login. It will come. Iko sawa, Joyce?
I'll figure it out on my own.
Pardon?
You moved a bit too fast.
You're doing what on your phone?
I can't quite get to where you are.
Where are you now? Okay, yeah, let me guide you from there. Where are you now?
I am center.
No, don't go to I Am Center. Odd links.
Odd link is on which link?
Okay.
It's on which I Am identity? Is it on I Am Academy?
Upon logging in, there will be after the 3 bars, Okay.
Okay,
see
but
here.
it's when you say upon logging in, we normally log into I Am Center. No?
Okay. Okay. So let me do this again. Okay. So
Can I assist?
On the
Sorry.
same menu where there is
Enda,
I am center.
You can
enda kwa
actually
Google.
you
Enda
can
kwa
actually
Google.
type it direct. You can actually type it direct.
What are we typing direct?
The URL iml harmonicscanner.com.
Yeah.
I am.
iml harmonicscanner.com.
Yeah. Then it will ask you to log in, right?
Yeah, it'll ask you
So
to log in.
doing that. We are now Googling. So, okay, so imlharmonicscanner.com.
You can go to that URL so that you can pick it from the screen.
And on the top, it says web scanner, sign into web scanner, right?
Uh-huh.
Okay, let's see.
Can I contribute a little?
Yes, Jeremiah.
By the way, the new website for the scanner and for all the other tools is also found. That's why this one is called the old one. So I think people can also use the new one.
And where is the new one?
Much cleaner, much faster, and much, you can actually use the new one, which is in iam.center.
Okay. So in iam.center, how do you get
In
there?
iam.center, it's very clear. You
You
just
go
go
to
to,
strategies and then harmonics.
yes, that's it.
Yeah.
Okay, and it looks, that one looks totally different from what George is showing. It doesn't have
Yes,
that.
it's the modern one, it's the cleaner one.
It does not have that arrow, that the arrow on the is it left hand side that George was clicking, you know, if you want to get the most recent. But should we, and then the listing of the currency pairs is on the right side, it's not on the left.
Oh, me, I've not, to be honest, I've not used that one, new one. I always use this one. So unless I get to it later on, then I'll explain to you guys, or someone else may explain later on.
Well,
Me, I've never used that one. I always use the one from Google. You go to IAM, then from there, old links, then I use Scanner there.
Okay.
But I can see some links that have been dropped on the chat box. Maybe you can follow them and see if they can be of help.
Well, what Lillian has sent is what you are directing us to do, which is said to be the old one there.
Which is the same here, yeah. So coming here, let me signing in.
Give me.
It's not working for me as well. Okay, people, I think we'll come to this later on if you allow me, so that we don't spend our time here and we have a lot on waiting. Let me see the chat box again.
It's clear, George. You can go ahead.
Yeah. So yeah, this means that at some point the odd links may be phased out as well. So you should start being used to the new things. Okay, thank you. So going on to Fias trades, just what you've been saying over and over again is that number one, before you take the trades, you should be able to determine what type of trader you are. What are you looking for in the market? What is your target for that day? So that you don't overtrade, or at the same time, you don't undertrade according to your strategy and according to your target pips and your target percentage in the market. So even a scalper is the person who says, I only want 10 to 20 pips, and that person is out of the market. So are you looking for 10 pips? Are you looking for 20? When you attain that, be out. So before entering the market, know what type of trader you are. Intraday 50 to 100 pips or 50 to 80 pips there. That's intraday trader, and that's a trader who can hold a trade for a day or a week. Are you a swing trader, a trader who is looking for 150 pips or even more? And you're saying you're able to stay in the market for even a week or more, okay? So determine what type of trader you are. And we said also that these types of traders are not determined by the hours that they can hold a trade, because you can be in a trade, you just get in, and then that trade moves quite fast. Within minutes, you have your 80 pips. So you see you're out in minutes, but you've not scalped. You have held that trade up to 80 pips. You're still an intraday trader. So determining what type of trader you are is very important. Number two, take note of the entry point. Take note of the entry point that has been given by Fias. What entry point was called? There is a reason why Lillian does not just wake up in the morning and then move to, to a computer and just type in trades. Take this one for a buy, take this one for a sell. She waits, and sometimes we wait up to even 12 without any trade. Why? Because there is no perfect entry point that she has seen. So that entry point is very key. Why? It will help you to determine what is your take profit, what is your stop loss, how much are you willing to lose, how much are you willing to gain. That is calculated from that based off the entry point that has been given by Fias. The other thing that you need to note while taking Lilo's trades is you must calculate your parameters based on what has been given. Don't calculate your parameters, that's take profit and your stop loss, based on your entry point or the entry point on your MT4. Why? Because a trade can be called and it moves so fast, 10 pips in profit. Then you see it, yes, quote unquote in real time, but you are late with even a minute. A minute in trading can mean 10, 20 pips for some pairs. So take note of the entry point. Calculate your take profit based on that, so that Lillian does not say we are bagged 20 pips or 30 pips and you are in red, or you are 5 pips in profit. That is one of the discrepancies that you must take care of. Number 4, take responsibility of your trades, okay? Every trader, every strategy, you have to take responsibility of your trades. Before you enter, there is nothing which is happening. That is what our book, a good book, Trading on the Zone, says. Before you enter that trade, whoever has called it, be it yourself, be it Lilo, be it any other trader in IAM, nothing happens before you enter. When you enter, that trade will run either in blue forever or in red as long as you're willing to hold it. It can go even 1,000 pips. It won't close because it has hit 1,000 pips. It is upon you to close it. It will not close because it has hit around $100 red. It is for you to close it or to determine this is my stop loss. So nothing will happen, nothing will stop happening unless you say, let it stop. So let's take responsibility of our trades. Let's not say so-and-so called a trade, then I entered, then you see what happened. No, before you enter a trade, be willing to lose. Be ready to lose a trade. There are only two options that can happen. A trade cannot stay in your entry point forever. It must go in two directions, in either your profit or towards your stop loss. So be ready so that whichever outcome you get, you're prepared. You're prepared. And that is what Fred is here to talk about tonight on stop losses and how to set the stop losses. Yeah, so that is it, guys, for today. I think I'll stop it at that so that Fred takes us through very fast on the other part of this particular session. So karibu sana Bwana Fred. I'm very happy to be part of this session, just to learn one or two things from you. I'm very prepared, ready with a notebook and a pen just to take something home. So asanteni sana for your listening. You've been a very good audience. Let's welcome Fred.
Asante sana, George. Thank you for going over the first part. I hope you can hear me. I'm going to be going over... Niambie?
Loud and clear, we are good. Yes, we can hear you.
Okay. So we are going to be going over stop losses today. Thank you guys for showing up. It's about 41 people. That's a good turnout. Thank you guys for showing up this day, preparing for tomorrow. So just to switch gears, today we're going to be talking about stop losses. I'll start with maybe just the theory and then I'll go over to the charts because I like to show examples because I'm a very visual person. So I'll show the examples, but before that, maybe we can have, I usually do a volunteer. So if someone can just unmute their mic and volunteer with me just to go through this discussion so we can kind of understand how you think through stop losses. It's not a quiz, it's not a test. Just if anyone can unmute their mic and allow to be a volunteer for just about 5 minutes or throughout this session. If I don't get a volunteer, I may have to just pick one with an interesting background here.
Okay, I'll do it.
Hi. Who has spoken? Trying to see who that was.
Joyce.
Hi, Joyce.
Hi.
Joyce, you're the one who asked a question before, right? I'm recognizing your voice.
Yes.
Okay, Joyce. Let's just talk through stop losses before we get to the chart. What is your view or your understanding of a stop loss?
It's like when you go into a trade and it starts going, like you wanted to buy and then instead of the trade exchange rate coming down, it starts going up. You fix a limit whereby you say at that point, I'll have to let it go.
Yes.
Yeah.
So for you, it's there in case you are wrong.
Yes, in case I'm wrong, yes. And also
Personally,
to
how do you
protect me. Huh?
Yes, that's what I wanted to get from you. So
Yeah.
two things. That's very fundamental that you've said. That number one, it's there to protect you. And secondly, it's there in case you're wrong. Those are two different, they sound like they're the same thing, but in trading, there are two different things. Because number one, to protect you is in case something like Corona happens, in case Trump says something ridiculous, the Brexit stories, in case crash, you know these things that you can't really anticipate or control. The stop loss is there to protect your account so that you don't go all the way to zero because of one event that happens, one world event, or even just a local event that can cause something. Secondly, is in case you're wrong. And I really like that we came up to that, that you kind of insinuated that, because trading is not about being right all the time or about escaping being wrong. Trading is about being right more times than you're wrong. So you're going to be wrong because you can't, trading is not predictive. We are reacting. So we need to see what the market is doing and then we react to it. So you're going to have to accept that you are going to get some losses. So in light of the fact that you're going to get some losses, you want stop loss. So Joyce, is there any criteria you have for putting a stop loss? Any whatsoever up to now?
Well, I look at the size of my account and I do not want to not have a stop loss because a trade could go, I mean, let's say I have $100. If I really can't afford to lose $10 on one trade. So I will pick a number of pips that sort of commensurate with the kind of loss limit that I can tolerate.
Wonderful. Someone make me the host. George, is it you? I want to share the screen here. Make me co-host. But you've touched on one of the topics that I want to talk about, because for me, stop losses is only two things, and you've touched on one. Actually, three things. Three things you have touched on. You have touched on two of them, from what it seems. Let me get my screen here so we can write. Yeah. You can see my screen, Joyce. You can see, I'm sure everybody else can see.
Yes, I can.
Okay. So the first thing you've talked about is for personal reasons. This is very important because you've just said for you personally, if you have $100, you're comfortable only risking 10, which equates to 0.01 as a lot size, right?
Mm-hmm.
So is this a personal, I'm assuming this is personal for you, that if you have $100 and you see -10, you start to sweat, right?
No, I start sweating at 4.
You start sweating at 4.
Yeah.
So yours is even less than 0.01, which you can't actually go less. But it's good to know that about yourself. It's very important to know. Because there are some people, for example, who would have $100 and they're thinking maybe I can do 20. If I see $20, I don't have a problem. But you have to understand that if, for example, in this case, if you only have 100, the lowest you can go is 0.01. So, and if yours is $4, it means $10 is kind of where that's like your limit. If it hits $10, you need to be out. This means that for you personally, you can only lose 10 times consecutively before your account is blown, right?
Mm-hmm.
It means only 10 times and your account has disappeared. So you have to have a strategy where you don't lose 10 times consecutively. Make sense?
Yes.
So when you're putting in your stop losses, you have to make sure that your stop losses coincide with how many pips is $10? 100 pips, right? This would be 100 pips. Yeah. So your kind of trades, you can put 100 pip stop loss. If you're trading something like indices, those ones can go 100 pips in probably 30 minutes. If it's very slow, maybe an hour it would take to get those 100 pips. But if you're trading something like just the currencies, then 100 pips kind of takes a while. So you've touched on one of the major things for anybody that's putting their notes down. When you're putting a stop loss, you have to understand what your account is. And we know the rule, like also Joyce has pointed out, for every 100 pips, you use 0.01. For every, not 100 pips, for every $100, which is 10,000 Kenya shillings, you use a lot size of 0.01. And then if you have $200, 0.02, so on and so forth, up to maybe a million Kenya shillings, $10,000 is when you can use a standard lot size. So that's the first thing, personal reasons. Get very comfortable with that. The next thing we're going to talk about, which now I'll go with you, Joyce, to the market, is what you can call price action. And if you've gone through your IM Academy, you know about price action, right, Joyce? You kind of have an idea about support, resistance, and all of that stuff.
Yeah.
Okay, so let's remove that. I want to come to an example here, and I want us to forget, I've gone to the daily chart because I can be able to replay on the daily chart. If you have TradingView, if you go on TradingView, you can be able to replay, meaning you can kind of trade, you can kind of rewind the chart and put in trades based on your strategy. So here I want us to look at what's happening here, Joyce. Can you describe to me what's happening here? What can you see in your own words?
Well, there's upward and downward movements of the trade, of the exchange rates.
We're here, right?
Yeah, there's a bit of that, yes.
And we can see you can see it's coming before, it's coming right after a very strong downward movement.
Yeah.
And then you said, continue.
Yeah, then just after the middle, it sort of breaks the resistance and goes below.
Somewhere here, right? This is what you're talking about.
Yeah.
And then then for some reason it refuses here.
Yeah. Then it starts rising again. Comes down.
Goes back to play inside here.
Right.
Right. So this is why I've drawn these. So I've drawn these here as I can see. It seems like price is not breaking this roof here, which you would call resistance, and also this one below here, which you would call support. But there's also two of them inside here where it's playing around. Now I drew this not knowing how the past looks like. So you have to confirm if these are actually areas that have value, meaning just test if it's a real support. And to do that, all you have to do is just extend these regions to the past as they are and kind of see if they make any sense. Does it look like it's making sense in the past as actual zones to you?
Yes.
Yes, you can see they're making sense, right? Right, yeah, very nice clean one. The one you can wonder is this one down here, because it looks like it's by itself. Let's see if we extend it, if it's making any sense. Perfect, we can see it's making some sense. So all of these are making sense in the past. It broke, retested, went up, came and played around here. You can see it's played around here, broke, retested. So these areas we've confirmed. So I want us to be looking for a sale. Not even a sale, by the way. Let's forget about a sale or a buy. What would you be looking to do here personally, Joyce? Assuming price is right here where it is, you can see this black. For me, the black is a sale. The green would be a buy. So what would you be waiting for to do here? And I hope everyone is following us.
I would be looking, if I'm expecting the exchange rate to drop. I would be looking to sell. And
What you'll be looking to sell if what happens?
if the price continues to drop towards the resistance.
We're here.
Yeah, up to there.
So you can see here previously, it has already broken a resistance,
Yes.
right?
Yeah.
So you're saying you would wait for it to break this one.
No, I would not wait for it to break. I would just
What
jump
would you
in.
do? You just, so here you just jump in for a sale.
Yeah, but it would be a very few,
Okay.
a small number of pips.
Or towards
At least
this
my,
resistance.
yes, towards that resistance. At least my
I
first
see
take
what you're saying.
profit would be, yeah.
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 Well, I see. You see how you have thought. You have not just
Yeah.
told me 10 pips. You have not just told me 50 pips, 20 pips. The reason you've done this is because obviously you're seeing there's a value here, right?
Yes.
It
Yes.
makes sense to target these areas. So I would say, to add on to your very brilliant thinking, notice here it has already broken this resistance. No, this support, I mean. It has already broken this support.
Yeah.
So I would wait to see a retest. So this is what I would do. See if I can get some lines here. So I would wait for price either to retest there or to break this one and retest there, or it might even break this one up here. Oops. Kind of messed that one up somewhere there. Yeah, so I'd wait for this, either of these to happen if I'm looking for a sell. If I'm looking for a buy, I'd wait for this to come back and break this one up here and retest. But just from looking in the past, you can see that for some reason it's not being able to break this resistance. This is why I would be looking for a sell, because it's not breaking this resistance. It seems to break this one easily. It's showing it has done that. It has done that twice,
Yeah.
both in a sell, both in a buy. So this one is kind of weak, just from what I'm seeing. So I would wait for it to retest. Yeah. So let's play this this price and see if it retests with maybe some weeks, so that we can see. So okay, it has run away from that one, but you can see this week.
Yes.
Can you see this week?
Yes.
Yeah. So if I was to take it back there, for me that's some sort of confirmation. But even let's just say we have lost let me not even reverse it. Let's say we were a bit too late, but we have already seen the confirmation we were waiting for. So we'd come in and put, let me see if I can get this short position right here where price is. And where would you target your take profit? Of course, down here, right?
Yeah.
And then where would you put your stop loss? You personally.
I would put it at the end of the pink coloring, I think.
Yeah, this is the actual stop loss. This is the stop loss. So where would you put it? You would say where, here?
Yeah.
Just above, or would you put it at the area?
Just where it begins.
Just, or right down here?
There, right there.
Okay. So ignore the pips. Let's play and see what happens. Continues. It was about to take you out. Just about. That one has probably taken you out.
Yeah.
If we can zoom
the
there.
Wicks are.
Yeah, the wick. But you can notice, this is the advice I would give when you're putting a stop loss. Don't put it at the beginning of the resistance, because you see this resistance is not, it's not, don't think about it as a line. You think about it as a zone.
A range.
Yeah, exactly. So you don't want to put it at the beginning of that zone. You want to try and put it just like above, away from that zone, so that the wicks don't disturb you.
Okay.
All right. But let's see if you are actually right. Because you can see it hit your, this is what it's called a stop hunt. It's as if it knew your stop loss was there, touched it, and then ran away with it, ran away with your money.
Ouch.
Yeah. But notice what has happened. It has broken this and retested. Let's see if you're actually right. So there's some good profits. And there's your trade. So you can see this week hit your take profit.
TP.
So you are actually right in taking this sale. You've done analysis perfectly. You've done everything perfectly. Your account is wonderful. But you can see your stop loss was triggered. You only kicked out of this trade because of where you put your stop loss. But I like the fact that you understood that where you put your stop loss, the whole point of this second rule for where you put your stop loss is you need to consider where price has been before. So you can't just say, especially if you decide to go to the market by yourself and enter in trades by yourself. Let's say you're not taking them from an educator. If you're taking them from an educator, then if they decide to give you a stop loss, then you take the stop loss that they've given you and take profit. I know someone like Lilo, for example, does not give stop losses or take profits. She just gives potential pips. So the reason we are doing this is because you need to be able to get comfortable, at least where Lilo has told you buy. Let's assume she told you buy here. I mean sell. Assume she gave us this trade. She said sell. It's your own responsibility to go and find out, to go and put your stop loss and go and find out where you put your stop loss, depending on two things. One, your account and your personal feelings towards how much you're okay risking and or not okay risking. And that will dictate whether you're taking the trade ultimately. And two, where price has been before. So for example, Joyce, if you are to see someone who puts a stop loss at here because they are saying, me, I like tight stop losses. It would not make sense, right?
Yeah.
Yeah, you'd be thrown out even if you are right. The idea of putting a tight stop loss means you're able to spot where price has been. You're able to do analysis very well. It's not just putting a tight stop loss for the sake of putting a tight stop loss. Because I've seen people who start with a tight stop loss when you come into the markets. They always start with a tight stop loss because they're like, hey, I don't want to risk too much. So, but their stop loss keeps getting hit. And then what do? They start putting huge stop losses. Not checking where price has been. They have no idea. They're just putting big stop losses for no reason. But look at this stop loss, for example, what I've drawn here. Obviously, you are risking more than you're willing to gain. You are risking 3, in this case of the daily. Of course, this is very huge. So don't take this, take this with a grain of salt. Because this is 384 pips you're risking versus gaining 139. This doesn't make any sense. Because basically here, it would, if you lost this trade and it hit your 384 stop loss, right? You would need to win 3 times just to break even from your loss. It doesn't make any sense. Your trades should look at least 1:1. Your ratio. You can see the ratio here.
Yes.
Risk reward ratio. Yes, it should look at like 1:1. But that doesn't mean you drop this below the resistance. You need to keep the rules. You would rather increase the take profit to turn it into a 1:1. And then let's increase this to 1:1. There, that's 1:1.1. And then check if that take profit makes any sense in history. You can see it still makes
Yes.
sense, right? So let's
Yes.
continue playing it and actually see if it goes for that take profit. Oh, run away.
So what you're saying is when Lilo gives a trade, you first take it and then go back and do some analysis.
If you're going to put a stop loss, yes. It's always advisable to go, because you see, that's your money in the market, not Lilo's.
But you
So if you just go on.
So are you going to say unless you're going to use a mental stop loss or something?
Let's talk about that. Let's talk about that. Now we're getting into questions, guys. I've finished. Well, let me first finish this. We can see this one went even past the take profit. So this was a very good trade. Right? We did 1:1. Stop loss was perfect up here. We entered late, yes, but we still made use of what we were waiting for, which means we could have eaten some profits from way up here, but it's all right. We still use the same criteria. So Joyce, on a mental stop loss, your stop loss, mental stop loss basically means this: you're a trader who has trained yourself to be able to exit, right? One, to be able to exit when you see price going to a certain place. Second, you must be very good at drawing up your charts, because mental stop loss doesn't mean you stop when you feel like. So for example, a mental stop loss in this case would be the same even as a mental take profit, because I'm assuming if you're not putting a stop loss, you're probably not also putting a take profit. Maybe people are putting a take profit, but let's just say stop loss. So you need to be able to be very honest with yourself and disciplined. Actually, the word is discipline. That if you see price, like here where we've gone, if you see price breaking above this resistance, you can say maybe that's going to be your mental stop loss. But you see, even then, that means you have to be in the market. Mental stop loss, you can't put your phone or laptop away. Mental stop loss doesn't mean you go to your MetaTrader and you're looking at the figures at ikifika -10 natoka. Sure, you can do that, but just from what we've talked about today, you can see where a reasonable stop loss would be. For example, yours, Joyce, you had said you're going to put it right here. So maybe you can figure out where that is in the chart. As here, it looks like 1.16219. So you can put that in your mind, or rather, you write it down. And then nice when you can look at your phone and say, if it touches 1.16219, I will physically get out. That's something you can be able to do, Joyce.
I'll blink and it will pass.
Exactly. Not even blink. You will tell yourself, just like everyone else, watch it in a room, it's coming back.
It will come down. Back.
Yeah, it will come down. Like you're the one who tells it what to do, Cindy. It will come down. It must come down. So a mental stop loss still does not ignore the fact that you need to know what you're doing, basically. That's the whole point of this stop loss. And the reason we're talking about stop losses is because this is what is taking most people out. Have you ever been in a trade yourself, Joyce, where Lilo has given out a trade? This used to happen to me a lot. I remember even talking about it. She gives a trade. I get into the trade. Everybody wins except me. End of the week, Lilo is saying, oh my God, 600 pips bagged on CG what? Me, I'm sitting there like, which pips are these that people have gotten? Me at most, I've maybe gotten 30 pips. Because I used to also come out very early. I used to be those people who I can last long in seeing reds. No, you've got people who can see even -$50 and you're still in the trade. But as soon as you see positive $10 blue, you get out very fast. So that was me. But you can see the reason why. For example, if Lilo gave us this trade, you would be out because this was your stop loss, which was
Yeah.
triggered.
Yeah.
Somebody else who had put maybe 10 pips would be out, definitely. Somebody who had put a higher stop loss would be in. Lilo would probably be in because the way Lilo puts her stop losses, they're not arbitrary. They're not just based on just how she feels. There's how she feels, meaning how our account is been set up and what she's comfortable with, but heavily tied in with the other 50%, which is actually more important, is where price has been. Because where price will always go where it has been, not where you are most comfortable or not comfortable. So that's it for this stop loss training on stop losses. We can now open it up for any questions. Joyce, if you have any more questions, you can ask. But thank you so much for being the volunteer today. I hope you have learned something.
Yes, I have. Thank you.
Right,
Right.
Sandy. Yes?
Hi, my name is Carol. How are you?
Hi, Carol. Fine, thank you.
Hi. So you said the trade went pretty well from where Joyce entered, except for the stop loss. But you also said
Yes,
you entered the trade late.
yes.
So if we had entered it at time, would it be when it started to go down from that consolidation, or do you mean, further up before the consolidation? And
When
how
I
would
say,
you determine the perfect entry point?
okay, let's give, for example, you see this spot here? You can see here where my cursor is moving.
I muted myself already. Yes, there. Yes, I see it.
Yeah, here. So let's assume that's where we want to enter, right?
Uh-huh.
Let's assume we want to take a trade from there. Let me bring back my tool here. Let's assume we want to enter from here. And let's assume we want to target down here. And a stop loss, we would say maybe somewhere up here, because we are seeing it might not break this. Now let's rewind this and let me show you what entering late does. Let's rewind it to there. Yeah, so we're telling ourselves if it gets to that point, that's where we are entering. See if I can stop it in fast enough. So we are watching the market, we are watching the market. You see where I've stopped it?
Sorry, I'm being interrupted here a bit. You said that could you go back a couple of steps, please?
So we have rewinded from here.
Yes, yes,
And we said when it hits this resistance, we are going to enter.
right.
So I played, and this
How
is
do
where
you
this is
determine
where I've
that's
paused
the
it.
best resistance to enter?
How do I?
How do you determine it's the best place to enter?
Well, actually, this is what I do. Like I said, trading, let's rewind it again. Like I said, trading is react, you react, you don't predict.
Mm-hmm.
So let's say this is all you're seeing,
Mm-hmm.
right?
Yes.
So what a very quick analysis, you can tell this market has come from a very huge drop.
Mm-hmm.
And then for some reason, it's playing around here, which means there are areas of value. So I just drew them very quickly. Right here, it seems not to have been able to pass up here. It seems not to be able to break down here. It also seems like there's some areas in between here.
Right.
So that's what I did.
Right.
And then I verified that by extending these lines, as you can see, to the past to check if they also make sense in the past, to give them validity.
We need to determine major resistance and
yes.
And
I'm just trying to find where price has been behaving.
Right.
Right.
Yes.
So then now I've managed, by doing all that, my whole point is to trap this price. So you can see right now where it is, I've trapped it between two areas of support and resistance, or resistance and support, whatever you want to call it. Because you can see here it was support, previously it could have been resistance.
Right.
So you can see here it's clearly trapped between these two, right?
Mhm.
So here, all I have to do now is just tell myself, all I'll wait for is price to break either of these resistances or supports, something like that, for me to take a buy, or for it to come and break this and retest it, for me to take a sell. Make sense?
Completely.
That makes sense, right?
Yes, it does.
Okay, okay. But notice now already, it has already broken this support,
Right.
right? It has come from this resistance. It didn't bounce off, it has broken it. So now what we are waiting for is to see if it will retest with some sort of wick, because a wick means it's running away from an area. You see, like here, you see here when it breaks, you don't see very serious wicks. You see here how it broke. Normally when it breaks, it just breaks. So when you see this, then you're not really sure where you need to see a retest. Here again, it didn't retest, so it just broke. Here it retested with some wicks, broke. So I'm waiting to see some wicks because it has broken here. I'm waiting to see it give some wicks on the next bullish candle.
I'm with
So
you.
look at this. You can see a wick right there, right?
Right.
But let's say you're hesitating because you're like, it's still a sell. It's not looking like it's bullish or anything.
Yeah,
Let's say you wait.
the candle formation is bearish.
Yeah, but now you start seeing, look at this. You start seeing here, it's like I've missed this opportunity, because now the wicks are starting to show like it wants to sell. Makes sense? So then you tell yourself, hey, okay, let me just enter. Because the reason I'm doing this is because this is actually what we do. It's never perfect like this. Because here's the wick we should have entered in, but maybe something told you, it's not making any sense. So let's say now you enter here because you're like, okay, let me just enter this trade now so I don't lose out. So we're trying to figure out, in light that you've decided to enter this trade here, where it is at a point of resistance, where would you put your zones? Obviously, to the next point of support, and your stop loss just above the previous area of value. So that's how I'm determining where to put the stop loss, because I know this area just from what we have built up. When price gets here, it usually decides to do something. And I know the next area it can get to, there's nothing blocking it here. There's not been seemed like anything is blocking it here. So that's why I can put my target take profit there. And here I can be sure that if it breaks this resistance, it has shown from previous records that it kind of tends to go higher. So I don't want to be in here for the whole move and put my take profit, my stop loss here. So I'll put it maybe somewhere conservatively here, make sure my ratio is making sense. 1:1, somewhere there. So 1:1 is satisfied. It's above a previous area of value, and my take profit is right there. So, and I take this trade, then I just wait and see what happens. In this case, you can see we have reacted. We've not predicted. So you can watch how it behaves. I hope that has answered your question.
Okay, so which type of analysis is that? Is it
This is just in your back office. If you go and check, what is it called? What is it called? George, remind me. Advanced, it's called what?
Market geometry.
Yes, market geometry. Thank you. So market geometry is the one that talks about trend lines, support, resistance. That one, let me tell you, Carol, if you can just read it, listen to it even as you're sleeping, as you wake up, even if nothing is entering, just listen to it.
That's is it 300? It's 300. Yes, it's 300.
Yes, it's 300. Yes. That one, if you're only going to read one to study one video, because you know I know us sometimes. That's the one you should be repeating all the time, because it will teach you how to plot these areas of value. And it just takes you watching someone doing it, and then you yourself just go and practice. Go and practice, go and see how you're drawing, just go into the history and look at things, draw it there. If it's looking like it's not making sense, test it in the past. See, okay, is that an area that price has been doing something? Adjust it if you need to adjust, because that's what's going to allow you to have very good entry. So you see, we've combined a couple of things here, Carol. We've not just done the support and resistance. We've also come from the fact that price has done this huge sell-off. You see all this? This is why it's consolidating, because it's exhausted. When price is exhausted, it's very easy to trap it and just say, if price breaks these zones that you've drawn, you can react to it. And all you can just do is trade between these zones. You see how simple it becomes. If you know the bias, the overall bias, this is why you're supposed to analyze from like the day to kind of figure out, are we in an uptrend, are we in a downtrend, are we in a price trap? So when it's trapped like this, sometimes it's even very good because you can just wait to see. For example, we know these two major ones up here, these two areas of resistance and support, they are very major, which means if either of them is broken, chances are it may break out for a bigger move. Because you can see all of these are smaller moves compared to this huge one. So it's resting now. But still within here, we can still play around. So
Would you recommend that we do a bit of this market geometry every day for the pairs that we typically trade in?
100%.
Okay.
100%. Even if you've taken the trade, take Lilo's trade, put your stop losses, go and try and see what's happening. You might not get it, of course. Doesn't matter. But you just need to look.
Okay.
Fred,
So that
what
at
is
least
that? What is that tool you're using to show us the stop loss and take profit, the pink, orange, blue
This one,
thingy?
you come here on TradingView. You see this sign?
Right.
So when you come here, it has long position, short position. So long is for a buy, short is for a sell. You can put it anywhere.
Great, thanks.
And then this one for replaying. You see this one, replay, where you can delete the market and then play it and see what happens. Very good for back testing. That one, if you've not paid for TradingView, you can only replay the daily chart. That's why I'm trying to tell you guys, ignore the huge pips because we're on the daily chart. But the analysis on the daily chart is very powerful because it allows you to kind of see the bigger picture. Because for example, this downward move is from a couple of days. So if you went to maybe the hourly chart, this downward move would have probably 5 trends inside there. But all of them going towards, creeping up towards an overall sell. So you can go and play around with this replay feature. It's very powerful, very powerful. Because you see, it's very easy to look at this trade like this and say, for example, here, Carol, are you still with me? Or who asked the question? It's not Carol.
Sorry, what was it? What question?
That's okay. Yeah. So let me ask, for example, here, just from what you're seeing right here, isn't it easy to see where you would enter for a sell or a buy? For example, where would you enter for a buy? Assuming you can see in the future.
At the lowest point.
Here, right? You would be like, here I could have entered for a buy. I would have entered for a buy here, all these pips, and then I enter a sell here. What? I would have made money. It's very easy to trade like that when you can see. But once you just come and click this replay and cut it off, suddenly it's like, hey, you're like, okay. You start asking, will it now break this? Ama, will it shoot back up? which is a good place to be in because you're not supposed to be predicting. You're supposed to be waiting for it to see. So this allows you to say, for real, the way it's looking here, me, I would have put a sell. Then what do you do yourself? Go and put that sell. You know, imagine, you know, your emotions don't know if it's real or not. Imagine as you're putting this fake sell, you'll still feel scared. But it helps. Put that sell and then see what happens. Let me see. Let me see what goes on here. I am already out. And then you'd be like, hey, this is how the market behaves. And then you can go and try and ask yourself, why did it kick me out? Maybe I didn't wait. Maybe it broke this one. I didn't wait to see what's happening. I wasn't waiting for anything. I was going off of this whole move. You start catching yourself. So it's very important to go back and play around, like you've said, to go and do the market geometry and analysis and try and draw up something on your charts where you can. Any other question? I can see we are getting to 9:35. Any other questions for me and also for George? I like the questions. We talked about, what's this? Stop losses, we talked about mental stop losses. I hope everyone uses stop losses, you guys. The whole point of all of this is the stop loss is your friend. The same way the trend is your friend, the stop loss is definitely your friend. I can tell you this stop loss, this market doesn't care if you have $1 million, 1 million Kenya shillings, 1 million bobs, doesn't matter. The day you're wrong, you don't want to not have a stop loss. Because, for example, on the daily move, look at this, for example. I want you to notice this. This is how many pips? 876.
Wow.
Imagine you're thinking here it's a buy, right? You're saying, hey, this is an uptrend, right? So you enter, you're saying, hey, it's trying to break up here. You enter for a buy, maybe somewhere here. It goes in your direction once, you're okay. If you don't have a stop loss, that means the market can go for your whole account. Because 800 pips, for example, is $80. If you had $100, so your account is finished. It's gone. Even if you had, let's say, 1 million Kenya shillings, right? With 1 million Kenya shillings, your lot size would be 1, which means you're trading with $10 per pip times 876 is 800,000 is gone. Just from one loss. Yet you could have put a controlled loss, which would allow you to trade again. Because you see, imagine losing $8,000 on a $10,000 account. Now you might say, oh yeah, you're okay because you still have 200,000 Kenya shillings. But notice how that has taken you back, because now you have to, but if you're following the lot size rules, now you have to go back to using 0.2. Which means now you need to start. Let me tell you guys, if I can give you a story. This is exactly what happened to me. You can be told by some of my friends, Akina George here, Akina Thomas. I was the person who was not, I was putting stop losses, yes, but my account, I was not following those rules. I remember the day I deposited $900, $90K. That same day, I lost 70. Because of these jokes that we play to here of telling yourself, I can win one. I just need to win just one, and then I'll follow the rules. Assuming that that would probably be the one that you lose. So use the stop. It's better to lose 10 trades at a time, because at least you learn something, than losing one trade that wipes out your whole account. There's nothing to learn. You just regret.
So as your account grows, let's say like now you've grown
Yes.
from 1 to 200, you
Yes.
still recommend you go to 0.02 instead of 2.01s.
It's for every $100, 0.01. So if you would have $200, to 0.02. But the key thing to understand here is it's per trade. Okay?
Okay.
So you don't stack trades. So what you will do, for example, let's say you have 50,000 in your account.
Mhm.
That means as per the rules, you can only use a maximum of 0.05. That means you can either enter one trade, 0.05, and wait for that trade to close, either a loss or a win, for you to enter another trade. Or you can enter 5 different trades at 0.01.
One.
Make sense?
Yeah. Okay.
Yes. So, but you really need to have, this is what I would stress though, before you start increasing your lot sizes as per, you made, let's say you moved from $100 to $200. Before you switch that lot size, you need to have a strategy that goes along with that. All right. So you can't do it in one trade that moved you from 100 to 200 and you over leveraged, and then now you switch it to 0.02. Because remember, all of these things you're able to do them because you already have a proven strategy that has a certain amount of wins against losses. I've seen someone asking, this is Kamukama, Innocent.
Yes, good evening.
Good evening.
I'm Innocent Kamkama, Kampala.
Yeah.
Now 2 weeks holding this stuff, and my challenge has been when I realized I would make entries when prices would be in pull-ups, and I would really get a lot of challenges. I would be flagged red immediate, and figures would accumulate red. So how can you go about entering an entry when in pull-ups?
You don't want to be seeing red. You're trying not to see red. That's like all of us. They have a problem with that color.
Okay, thank you.
So what you can do, firstly, Innocent, the reason you see red immediately you enter is normally because of your spread. There's some money the broker takes to facilitate you entering. That's why the first thing you see is normally red. But if you're saying you always enter on a pullback, first of all, I would ask is it trades, someone's trades that you're taking? Maybe you might have entered late. Because basically what a pullback is, see if we can show here. See if we can show here. Because sometimes entering at a pullback doesn't mean you're wrong. It just means you entered at the wrong time. See if I can speed this up. You can see my screen, Innocent?
Yes, I can see it.
Okay. I want us to find that trade opportunity that we saw. Wonderful. You see this?
Yes, yes.
You see this piece of the market for sale?
Yeah, I see it.
So let's assume you entered here. Yeah, somewhere there. You can see why you would see red first. Because before this market dropped, you entered before a pullback.
Yes.
The only way to know if you're going to be on a pullback is that market geometry. You have to study why pullbacks happen and where they go to. For example, look at this move down, right?
Okay.
And then the pullback went to an area of resistance.
Yes.
But here where we have entered is at an area of support.
Yes.
In a downtrend, you don't want to enter in an area of support. You want to enter in an area that acts like resistance, that will push it lower.
Yes.
So you have to, but also don't feel any pressure of seeing red. The best traders see red. I think only one of them that I know, Christopher Derrick, is the one who's an expert at entries, who sees very minimal red. But the way to see less red is to make sure you're entering in the right position, which means if you're going for a sell, you're looking to enter at areas where the market retests previous support, retests it as resistance. If you're going for a buy, like here, you want to enter a buy when you see the market has broken a previous area of resistance, tested it as support. That's when you enter. So you have to wait for retests if you want to see less red. You'll miss more trading opportunities, but you'll be safer and you'll have better entry. Asante.
Okay. Asante sana.
Any other
Thank
question?
Fred, I have another question.
Yes.
Which is the best time to analyze? What is the best? I guess it's time, 1 hour, 4 hours, 30 minutes to analyze a chart.
The best time to.
And what is the best for intraday traders, and what would be best for scalpers?
Okay. So the best thing is to do top-down analysis. Top-down analysis means you start with probably the daily to check the overall move. It's what I can advise. You go to the daily to check the overall move to get the bigger picture. What's been happening? For example, right now on, well, this is not the, from here where you can see this, not currently. From here, what you can see on the daily for Euro USD, it has been going to a downtrend. Yeah, because it's creating lower lows, lower highs. So now that you know, you're kind of looking for a sell opportunity. But you can also notice where it has reached based on previous price action. So you can see it still has a very long way to go down, which means chances are it has not finished doing this downtrend. Chances. So now that you know that you're looking for a sell, now you can go to the 4 hour. Okay, it's telling me now I can't replay because I've gone to the 4 hour. But anyway, so now you can go to the 4 hour and try and find your entries. No, sorry. And draw your resistance and support. Right? So you can come and just quickly come and look at an area like that. You can start with the ones that are even very clear. Something like that. And you see how I'm using the crosshair, because the crosshair it extends lines, so I can be able to see, I can be able to check this area and look in the past and see if it makes any sense. You can see something like that. These are the areas, so you can see I've already trapped price. Somewhere here. So you can even try and find some, because I've condensed the, you can see on the 4 hour, what is it doing? It's on an uptrend. But here, because we switched gears. But here you've already trapped price. So you can find another area, maybe somewhere in between here, right? Maybe you can put a horizontal there, horizontal line. Maybe you can tell yourself, okay, if it breaks up above this, You can tell yourself, oh, actually, I've skipped. Sorry. So after drawing all these zones, you can now go down to the 1 hour to look for entries. You can see this 1 hour looks very similar. It's been on an uptrend. So you can tell yourself if it breaks this area, if it comes, breaks this area, retests, you can enter for a buy. And all of this, by the way, don't even think I'm very clever. All of this is in your back office, exactly the way I'm saying it. In fact, in a better voice and
Yes.
better explanation. It's just very simple. But you need to have more confirmations other than this, not just this. But that's a very simple thing. So you see what I'm trying to show you guys is to react to what price, to look at what price has done in the past and then react to what has done in the future when it comes to specifically stop losses and also just when you're trading. I hope that has answered. So I would say the daily to see the overall trend, the 4 hour to plot your resistance and support, and then maybe try and look for an entry in the 1 hour.
So that's for an intraday trader.
This is for every
This
trader.
is the case for a scalper as well.
This is for every trade. Because you see, a scalper still has to know where it's scalping to. Because you still have to put a buy or a sell, right? Because it would be very unfortunate, for example, you see this is an uptrend. To be very unfortunate for a scalper to be buying in this, trying to look for buys here. I mean, trying to look for sales here. Because your sales, you're relying on pullbacks. So it means there are traders who do it, but it means they are very good traders. Right now, me and you here, we are advanced beginners. We have no point, we have no reason, even if we ever become advanced, we have no reason to trade against the trend. There's nobody we are trying to impress here. We are just trying to grow our accounts. So even whether you're a scalper, intraday, even a position trader like the banks, who can even manipulate the market, they still need to know overall. That's why they hire very smart people to know where the market is going and not to be against it. That's why they put in money to try and trick people like us, to try and give false breakouts and things like that. So I would say, even if you're a scalper, you still need to know where you're scalping to. Just like the way an intraday needs to know where he's going to keep his stop loss and his or her stop loss through the night or through a couple of hours. You need to know. So I would say it's analysis is for every sort of trader out there. You need to do the analysis.
Right. Thank you.
Yes. I think I've seen some other hands, and I think we're running out of time. I think I was supposed to stop at 9:45. So George, I think we have a couple of questions, but I don't know if I can go on.
You have some more?
I think I saw, because I'm sharing my screen, I can see some chats.
I think you answered that. It's about the short and the long positioning.
Yes. Okay, yeah. So I think the people are just commenting. So yeah, I think thank you guys for listening to me today. Thank you guys for listening to George. 41 people is ridiculous. Thank you so much for you guys coming to listen to us. And I hope for a very good, profitable, and safe week for all of you. Asanteni, you can take it back. I'm not sure if it's George or Lilo. Probably Lilo. Asanteni.
Thank you, guys. Thank you, George. Thank you, Fred. See you guys. I hope you've enjoyed the session. We are here back next week, as usual, next Monday, same time. So thank you for your time. Thank you for just your value as well for the trainers this evening. Thank you very much. Good night.
Good night.
Thank you, people. Good night.
Thank you.